Good day, everyone. Welcome back to the charts. You guys are tuned into the Market Beast edition of the channel here. Fellow compadres, stopping in with you guys once again to provide more content on a particular currency. Today, we're going to be taking a look at gold spot and the USD pairing. See if we can understand the short to midterm direction in the markets here and just kind of explain why there's been some downward pressure, or try to explain that rather. If you're new, just joining us, welcome. Consider hitting the subscribe button if you enjoy the content here. And also my loyal subscribers, welcome back, guys. That's all we're going to do in this video. Just try to determine the short to midterm price on the spot gold pair USD pairing here. And also towards the end of the video, I actually have something really interesting I want to show you guys on the higher time frames. You don't want to miss that. So let's just go ahead and dive right into the charts here, shall we? All right, so today's November the 24th, 2020, and the current price of gold spot and USD pairing is going to be $1,803.10, down about 0.20% for the day. Okay, guys. So the lines that you see on the chart, we didn't just put these lines here. They've actually been there. We're going to revisit a video very quickly here. The overhead line is going to be 1,967 and 12.72 cents there. And the lower line here is going to be at about 1783.51 cents, okay? And just to verify that we didn't move anything, let's just visit this video that we posted on November the 9th and just listen in very quickly. Hopefully we have the audio good there, and listen at what we thought could take place in the gold price here in the short term, and it goes as followed. In this case, I'm just going to say that gold has the potential to back test the previous support level that we've already identified here as potentially 1,782. And if it gets a little bit more extreme, we're just going to have to put that line back on the chart. That sits at about 1,600 and about 34ish, I think we said, represented there on that green line we just put on the chart. But let's not get too bearish here on gold. Let's just leave this thing out saying that gold has the potential to bounce around and consolidate sideways in between these two levels. And we're going to keep this on the chart, so that way when we revisit, we'll just know everything is still as it should be in the spot gold price. And these two lines, for those of you listening in, is going to be at about 1,783.51 cents and a high of about $1,967.72. So there you have it, folks. I don't know if the audio is good, but if we didn't hear it, I'm hovering my mouse over on the right side over here. You see it's 1783, and of course on the top there's about like 19. It's kind of see that barely 1967, and I think I said like spot gold price, gold spot gold, guys. I don't know. All right, so same thing, right? Tomato. Okay. All right, so these are the daily candles, and as far as what I can see on the daily candles, it looks like the daily is not too happy to be going in an uptrend, obviously. And I don't know, guys, it looks like it really is acting as a magnet towards this 1783 level. So I wouldn't be surprised within the next, I don't know, 48 to 72 hours we get a test or potential breach or spike below that line. That wouldn't be a surprise to me. That would actually make me a little bit nervous, honestly. Because as we get to the higher time frames, what I wanted to show you guys, you're going to see that it's in a position now in the higher time frames where it's either going to get really bad or it's going to consolidate sideways within these two lines here that we have on the chart. So it could go either way. Let's pull up the 3-day to see if we can see anything else here. All right, so yeah, you see that? I mean, what I'm looking for is some sort of wick below the price. If you notice here, on the, what is this? This candle here is going to be August the 11th. You see this large wick below that price? That's what I'm looking to see. I need to see some that represents buying interest. And so far, I just don't see that in the markets here. As far as what I can see on the daily, I can't see it on the 3-day here. And as we go up higher, we may not be able to see that at all as well. So the 3-day, I mean, there's a small wick there, but I mean, I don't know. This downtrend looks pretty aggressive, guys. And I don't think these small wicks below the candles that I can see here on the chart are going to stop this price, at least right now. Maybe it'll happen within the next 3 to 5 days. I don't know, right? But as far as what I'm looking at here, I'm just not seeing it yet. Okay, that could change here in the short term. Let's crank it on up to the weekly here to see if we see anything else. All right, so yeah, the same thing, guys. I'm not seeing any financial support below the candles bodies. And I know some people are like, look at other things. I just pay attention to the charts, guys. I don't know what's going on in the news. Other things, I don't pay attention to that stuff, guys. I don't know when the last time I watched the news. But as far as the candlesticks here in front of me, I'm not seeing any buying interest yet. Okay, that could change. We still have about 2 days and 18 hours to close this weekly candle. So let's just be patient and see how this plays out. But again, my target, we've already explained that, November the 9th, 1783 is the level that could have potential support in the markets here. Let's crank it on up to the monthly. We'll make this as short as we possibly can, this video, guys. Hit the like button if you enjoy the content so far. Support the channel. Okay, so on the monthly here, this is where it's actually pretty interesting. And this is where my knowledge of candlesticks comes in. I can clearly see that this area is going to get a revisit at some point in the future. I know it's pretty bloody in the markets right now, but when the markets are finished retracing, this level will be clear. Let me just put something else there so I can show you guys and it could look a little bit better. This area right here, for those of you listening in, I just put a range in between $18.79 all the way up to $2,075. Okay. Whenever the price is finished retracing in the markets, when the price returns to this level, there will be no resistance. I could just, if I could put it as simple as I possibly can, that's basically what I can see, represented by the wicks just above those candles bodies there. Okay. So let's just be patient. We still have 5 days, 18 hours to close on this monthly candle. It'll be really nice to see some sort of support at the 1783. Now let's pull up the big boy chart here. Let's pull up the 3-month here. And I actually want to go over a few things. I'd hate to erase the lines that I have. I've had these lines on the chart for so long. Okay. This is not a video saying that it's time to get bearish on gold. Please, okay? This isn't financial advice, not your financial advisor, okay, guys? But one thing that I'm paying attention to right now is I'm noticing something a little interesting in the RSI in comparison to the actual gold price, okay? Well, gold spot, okay? There's currently potentially a bearish divergence. It's not confirmed yet, okay? But I have my speculative cap on, and I'm saying this before it could play out. I'm going to say this now. So far, the price in comparison to the RSI, if I just put a little line here, if you can see that, correspond this April the 2010 up to, let's say, January 2013. We're going to correspond that RSI's high with the actual spot price here. Right there. Okay. And we'll also do that with the current price here. And we'll do that with the RSI here. So far, it looks as if the price is trying to develop a bearish divergence. Again, this is not confirmed. Take it easy. Do not hit that sell, sell, sell button or that put button, okay? We need more time for us to understand whether or not this is going to be a bearish divergence. Now, how do we know whether or not it's going to be a bearish divergence? Okay, the first thing we have to understand is this is a breakout of a consolidation rate. Let's get rid of some of these. Man, I hate so many lines on the charts, man. I'm actually going to erase these lines as well, guys. We'll put them back on the chart at some point. I remember the levels. Now, this is a breakout from a continuation pattern, okay? This continuation pattern is a symmetrical triangle, okay? Right here, boom. So it broke out right here at about April 2019, approximately. These are the 3-month candles. I've said that many times, okay? When you have such a strong uptrend, okay, the price doesn't just kind of reverse and collapse. No, that's not how it works, guys, okay? What you see when the price went down here, I mean, you can call it a collapse, but notice what happened before the price went down. Let's just zoom in here. There was consolidation, okay? So if we're going to expect, let me just outline it so you guys can not just keep rambling. This is the consolidation. So let's just measure that time. So it took approximately 640 days for this bearish consolidation range to make its move and it broke out to the downside. This consolidation range was able to produce a impulse leg to the downside of approximately, let's just measure from the bottom of that box, in a 3 months candle. Okay, can I see? About 23% to the downside. Okay, so why is that information important? Well, the reason I'm bringing this up is because if you guys if those of you who are deciding that they want to get bearish on gold, I'm going to tell you this right now, we're probably going to need some sort of consolidation before a move down, or the price will simply take a small pause here and it will continue the trend to the upside. Okay, so take it easy. If you're thinking of shorting gold here, guys, that is not a good idea. And this video is not suggesting that you should short gold. If we're going to have a confirmed bearish divergence on the 3 month in the RSI comparison here, the next thing that I would be waiting for is a consolidation range in comparison to the consolidation range that took place before the 23% move to the downside. So I just put, excuse me. So I just put this same rectangular box that's here over here just as a speculation or some sort of guidance as to what would be required in order for the selling interest to even have a chance at pushing the price down. I'd say that it needs to consolidate for at least the same amount or just under or just over the same amount of time, 639 days here. So what does that leave the price on what day? April 2020. I'm not saying the price is going to be stuck within here for that amount of time. That's, I guess, just over a year. I'm not sure how long it is. Is it possible for it to hang around this time? I mean, sure, why not? If it's a bearish consolidation range, it would definitely need to consolidate sideways before the move down, because I highly doubt gold is about to just collapse through the floor right now. I could be wrong about that, okay? But one important level that I'm going to say right now, and we already have it on the chart there, is 1783. If gold has trouble at 1783, I think there's buyers. I'm pretty sure there's buyers standing there, guys. This isn't financial advice, but that was the previous level of resistance. Resistance, support, support, resistance. That's the name of the game, guys. I think what gold is doing right now is simply back testing the previous resistance level, okay? So will this resistance level now act as support? Let's let the price action determine that, guys. I'm no genie. I don't know what's going to happen next. But what I will say is I think that since the price is broken out of a symmetrical triangle, a continuation pattern, when you're in such a strong uptrend, it's hard to just kind of bet against it and you know, with the hopes that it's just going to collapse to the downside, guys. That's not how it works, guys. And we're talking about an asset class that has trillions of dollars, okay? So yeah, definitely that's not how it works, guys. This isn't like crypto or Bitcoin or something, all right? So one of two things is going to happen. If the bearishness is trying to verify a bearish consolidation, well, the sellers, if they're trying to develop some sort of bearish consolidation before the move down, it's likely the price is going to consolidate within a range, and that range will probably be where we had the lines between 1783 and 1967, okay? And we'll probably see a lengthy consolidation before the move down. It's not just going to collapse through the... In fact, I'm looking to go long on gold at some point here if the downwards pressure continues, depending on how violent it gets, obviously. But if it has trouble getting below 1783, I will be a buyer in the gold asset here, okay? So that's what I'm looking at, and I still have a target of 2,300 on gold. Okay, that's my conservative target. Obviously, it can go higher, but I've had that price target ever since the breakout of this symmetrical triangle, and that's how I'm looking at gold, guys. Okay, so let's just give this about 3 to 6 months for the price to develop. Let's watch the 1783 level. That's the previous level of resistance. It should be in the operative word, should act as support. We just have to keep a close eye on the price action to determine whether or not it's going to act as support. But typically that's how it works, guys. The resistance level has been broken through, and it's likely we're just getting a back test here. It's probably going to take about 3 to 6 months to verify whether or not it is going to act as support. And from there, the price should continue higher. Let's watch the 1783 level, guys, and see if it's going to hold its support. Until then, guys, that's pretty much it. Leave an appropriate thumb just below the video there. Leave a comment down below. Let us know what you think is going to happen on the gold spot price. And it's Napoleon Macro, guys. I'm going to go ahead and sign off. Thanks for tuning in. Be sure to take care of yourselves, and bye for now.